And first of all, welcome everyone for attending this seminar. I'm very glad to see so many people here. My name is Espen Granstad. I'm the CEO of Investtech, and I will split my presentation into two. I will talk a little about the theory about technical analysis and some of the research that we do. And I will also make some examples with the stocks and the market, how we work and how we look at the market right now. And I will also get some help from Jan Marius, my friend and my colleague, and he will also do some demonstration how the system, how we think, how we work to find the stocks that we think is the most interesting right now. I hope everyone can hear me quite good. Perfect. I will start with telling you just briefly about Investtech. Investtech is a Norwegian company established in 1997. It's based on research from the University of Oslo back to 1993. We are supported by the Norwegian Research Council, and the results from our research you can find in our analysis and in numerous reports. This shows that quantitative analysis yield good results and can be a useful tool for investment decisions. It's based on the theory of technical analysis, but we use mathematics and statistics to identify the signals. And by doing so, we can also use it to the research to see the actual results, because that has been difficult by using technical analysis, because a person is sitting and writing the chart with the trends, the price patterns, but by using mathematics we can then identify also the results of using technical analysis. We analyze more than 26,000 stocks, mainly Europe, Scandinavia, some Asian markets and also the US. We have a subscription from professional traders and investors, so we are totally objective. We are not dependent on how much you invest or how often you invest, but the important part for us is the investments that you do, you will profit from. And when you talk about analyzing stocks or commodities, currencies, we are often talking about fundamental analysis and technical analysis. The fundamental values that you see in the market, in a stock, in a company, changes very slowly. Like the CEO or the board of directors, the branch that the company is in. But the investors, how they look at the company, how they look at the information, changes rapidly. So the fundamental analysis gives us security, it gives us confidence, but the technical analysis is for timing. When to buy, when to sell. And this is an example of the Shanghai index from 2006 until 2008. And the market moves in different waves. When it's gone a lot down, it goes down to depression, up to skepticism, optimism. Then we can read in the newspaper that now you have to invest in the stock market. We are close to then greed. It turns over, but we still expect the market to go even higher. So we are greedy and then in denial because we expect it to go even further up. Pessimism, because we thought we were right, but we have lost money. Down to fear and back to depression. So we use technical analysis to identify these waves and try to make a good strategy. Because it's all about mindset. And the mindset has to be a good strategy, because the mind always tries to trick us. An example with George Soros is not whether you're right or wrong that's important, but how much money you make when you're right and how much money you lose when you're wrong. And Soros explained very good that the risk-reward is very important, because you need to close your risk and let the reward be higher. And this is also why it's very important to have an easy, understandable strategy, because it's only when you have a clear strategy you have a clear mindset on how to react in the market. And by using technical analysis, it's easier to adapt to a good strategy that can, then you know when the market is changing. Because using only fundamental information, it's very slow and it's very difficult to make changes. When is the board of directors not right for the company? When is the CEO not right for this company? And by looking at the market, all the information is already in the price. And this is why we use the technical analysis to see which company has the momentum of, or the possibility to be a good investment. I will go a little bit more into the theory of this part of the presentation. And the four main elements I will talk about today is trends, support and resistance, price patterns, kurspatron, and volume. And I will also explain it combined with the research that we do. And the main elements of a trend is a positive trend, neutral trend, and a falling trend. And an example of a stock that in a rising trend right now is Heineken. And the chart you can see here is automatically made by Investtech. So you don't write or draw your own trends or price patterns. It's all automatically made by the algorithms. And you can see here that the stock is in a rising trend and a continued upward development is indicated. And some of the challenges with the technical analysis has then been, is this working? Can you use trend as a strategically part of your investments? We made a research report in Oslo Stock Exchange and also Sweden. You can see the result from the Swedish result down left in the bottom. And what we identified in the Oslo Stock Exchange was that it was 3,747 stocks that came into a rising trend in this period. It was from 1996 until 2009. In the same period, it was 2,792 stocks that came into a falling trend. And what we saw that stocks that came into a falling trend started the first month with a fall of 1.1%. But on average, from the signal was given to the year end, it gave an average return of 5.2%. The index in the same period gave an average return of 12.3%. But stocks that came into a rising trend gave an average return per year of 20%. So if you expect the market to go sideways or up, you will statistically get a better return by investing in the companies that in the rising trend. And we also saw a similar development on the Swedish market, and it's a good indication that it could also be a useful indicator on different market as well, not only the Norwegian and the Swedish. So trend is one of the main and most important elements of the technical analysis. And it's also important to just remember that it could be different in different time lengths. So this is an example of the medium-term chart below and the short-term chart higher. So we are often getting feelings for our investment, especially in the short term. So it's important to also look at the medium or longer-term perspective. Our short-term perspective is a chart of 5 months, and it gives an investment horizon for 1 to 6 weeks. The medium-term chart is a chart of 18 months, 1.5 years, and it gives an investment horizon for 1 to 6 months. And the long-term termine is a chart of 6 years, and it gives an indication of the stock or the market 1 to 6 quarters. The second element is support and resistance. This is where a stock or an index normally turns. Round numbers, especially in a rising market, and it's a good indication where to buy, where to sell, especially when we use stop loss, and we also use a target price with a risk reward. So we use these levels to indicate where to go in and where to sell. Here's an example with the S&P 500. It's not updated till today, but It was on the news broadcast in Denmark when I was visiting them. And the index is now right above 2082 approximately. So it touches the resistance level, which you can see. It also have a resistance level at 2110, and we have a support level at 2040. So these elements are then automatically written in the chart, and it's very important to follow to see where can we expect the market to turn. The fourth element is kurspatronen, price patterns, and it also tells us a little bit of the psychology of the market. What do the investors react to? And especially head and shoulder pattern, the top one, where you can see that the market has gone too much up, there are too many positive investors, and it's a trend changing pattern. It says that the market has gone too much up, and the positive trend is over and negative trend is started. The double top or double bottom is the same indicator, that is a trend changing indicator. And you have rectangle patterns, which is a shorter patterns that gives you can see it easily in an upward trend, where a stock or investors are not certain where the stock is going. Maybe they're waiting for new fundamental information or news from the company. And on the stock exchange, there are amount of buyers and amount of sellers. And if the average investor are not certain if the stock is going up or down, it will then go in a sideways pattern. And by identifying the break up, it means that there are more positive investors, and they are willing to pay a higher price because they also expect the stock to go even higher. And this is how we're trying to understand what the investors are thinking by using these price patterns. One example, a little bit back in time, Oslo Stock Exchange, 14th of January 2008, and you can see that over the year 2007 it built a big head and shoulder pattern. And the stock exchange has been in a positive trend for many years, and by the 14th of January, it broke down and gave a big sell signal from a head and shoulder pattern. Well, sometimes it's difficult to react to some of these patterns, but by getting a big red arrow when you log into your computer could be a help of just thinking, what should I do with my risk? It took approximately 14 days or 10 days, 2 weeks, before it actually took out the target price. Went a little bit up again, but continued down to approximately 200. Here's an example of a rectangle pattern. The blue lines indicates the rectangle pattern, and the arrow shows the height of the formation. And the theory says that it should then reach the target, the height of the arrow, inside of the time frame. The time frame is the length of the price pattern. And it's a positive indicator that tells that Brunel is a positive candidate and interesting stock to actually look at. And again, how often does this happen? And can I benefit from it in my strategy? By having algorithms automatically identifying the same pattern is the same algorithm that was used yesterday, is the same algorithm that was used 10 years ago. So now we can measure and see what did actually happen with the stocks that gave this signal. And what we tested was to see how many stocks went to the objective, the arrow, inside of the time frame, the length of the rectangle pattern. We did this in the Dutch market, and we identified 790 buy signals from the rectangle formation in the period 1996 until 2004. And one of our biggest customers in the Dutch market is ABN AMRO Bank. So we did it together with them. So to present it, we do approximately 1,000 analyses every day, which they use in the bank systems. The average height was 13%, the average length was 107 days. So it's not small patterns, but it gives an impression the size of the rectangle. And in this period we saw that 67% of the stocks that gave a buy signal from a rectangle pattern actually went up to the target price. So 2/3 of the stocks that had the buy signal went up to the target inside of the time frame. We did the same test in Norway. We also did an update in 2008. And in this time frame, we identified 1,088 buy signals from the rectangle. And the average height here was 13.4%. The average length was 98 days. The interesting part here is the result that we saw that exactly the same result, 67% of the stocks with a buy signal from a rectangle actually went up to the target. And then we can go back to Brunel, which has then the buy signal from the rectangle, and we can then predict that it's a 67% probability that the stock will take out the target price inside of the length of the price pattern. We also saw that there are a few smaller patterns. 7% went up just in one day. 53% went up to the target price inside of half of the length of the price pattern. 67% went up to one length. That's theory of technical analysis. And actually 76% of the stocks with a buy signal from a rectangle went up to the target if we had added 2 lengths of the time frame. So double the length of the price pattern.
When do you start following the stocks after an IPO? You take 3 months or 6 months? Or?
At least 3 months before we can get some information about the stock, and the more information we get, the better the results of the data, because we need the data first before we can actually follow it. So in theory, this is Euro USD, so inverted head and shoulder indicates that the down market is over and a positive development is started. The rectangle pattern is a continuing pattern, so it just says more or less that it will continue in the same direction that it's already in. And the double top is an indication that it's close to the top and is starting a down trend. The last element is volume, and the volume is important. It's underestimated indicator. And it's also indicating of strengthen this trend, break of a rectangle pattern or a price pattern, and is a signal of support and resistance. And it's also indicated that the trend might be not as strong as we expected. So we can use it on all the elements, and it's underestimated. What we are looking for is to try to see the development of the volume through the days compared to the price. And what we are looking for is when the price go up, the volume increases, there are more aggressive investors that are willing to pay a higher price. They're taking out the sellers because they also expect the stock to go even further up. And what we're also looking for is weakness in the volume. So if the stock goes up, the volume goes down, it's in the indicator that the buyers are removing themselves. There are not so many positive investors. And it's an indication that the trend might be over, so I have to follow the trend even more closely. Indication, if the volume goes up and we have a kurspatron and it breaks down, it tells me that there are more aggressive sellers that want to get out, and it increases the strength of the price pattern. And also in the trend, if I see the volume goes up and the stock price is falling, it's still an indication that there are more aggressive sellers. We also did a research report on the volume balance to see if how the price of the stock developed after a positive or negative volume balance. We have 3 indications on the volume balance to see how the price develops compared to the average of the volume. It's a short term, that's 5 days, so the volume balance for the last week. Medium term, that's the last month, so the volume balance for the last 22 days. And the long term, 1 quarter, 66 days. And what we tested is when we had a positive volume balance in the medium term, how did the stock develop afterwards? This is the Scandinavian market with Oslo Stock Exchange, Sweden, Denmark and Helsinki. And we saw that as long as we had a positive volume balance, the stock in average outperformed the index. And by seeing the similar result, especially with the buy signals or the positive volume balance, is an indication that it could also be used in different markets. You can also see this light blue around the line. That's one standard deviation from the average price. And the dark line in the middle is then the stock exchange in average through 66 days that this was tested. So we tested the result from a positive volume balance and 1 month, 1 quarter. So how do we look at the market? Trying to use all these elements and to figure out what can we expect in the future. The IX has been in a negative trend. You can also see that it's given a negative signal from a rectangle pattern, also 2 double top patterns on the way down. It's now broken up from the falling trend. That's a positive indicator or an indication that it might go more sideways. So from this point of view, we have an important resistance level at 456. That will make an indication that if it goes over this, it's a positive signal and it will be weak positive. We have a support level at 410, so a breakthrough down 410 will be a negative signal and it will then continue in the negative trend. Another thing we also look at is the average volatility through the year and see how the stock exchange move by average through the year. So we have from January, February, March, and we can see from middle of March, it in average goes up to the 2nd of May. This is an average of the stock exchange from 1992 until 2013. So we also look at which part of the year we are when we are looking at should we give it a positive indication together with the technical analysis. So right now we are in a positive period of the year. We can also see that we are in a positive period from other Scandinavian and also worldwide indexes. It normally is a positive period until the summer. September is statistically the most negative month if we look at the indexes more or less everywhere. And also the last part of the year is normally a very good part to be invested. Investtech, we have then a subscription that you can subscribe to our analysis, and you have to then figure out what kind of stocks, what kind of risk do you want to take, because everyone has different time length, everyone has a different volatility or a risk strategy. We also trying to measure how our analysis works. We all have a model portfolio which we update once a week, and you can follow it every day, but once a week we do changes in the model portfolio. And this is the model portfolio right now. You can also see the recent stocks that we've taken out of the portfolio and the results. So the results so far this year isn't so good, I must admit, but it's not about having right or wrong all the time, but in average having a good performance. And from start in 2001, the portfolio has gained 252%, but the index is still in a negative area with the minus 23%, 24%. And by looking at some of the stocks, Brunel I was already mentioned as an example. But I think it's important to then look at both the buy signal from the rectangle pattern, but we also see that it's a positive volume balance. So it's a good momentum in the stock, that more people are buying it and pushes the prices up, and it's an indication that people are willing to pay a higher price because of they expect the stock to go even higher. And another positive thing here is it's close to the support level at 18 euros and 40 cents. So that means I can also use a stop loss just beneath this area, and it will also then neutralize the rectangle pattern, and it will also give an indication that it's back in the horizontal trend. But from this part, as long as it's above 18 euros and 40 cents, it's in a positive area. And you also get a text beneath explaining why we are positive or why the system is a positive candidate. Another example that you already seen today is Voltus Clue. Sorry about the pronouncement. But here you can see it's already indicated a positive trend, and by the research that we've shown that done in the other markets, but it's a good indication that it will continue upwards. It's close to the roof of the trend, but the research shows that as long as the stock is in a rising trend, statistically it will outperform the market for the next period. We also see this buy signal from a rectangle pattern. It already has taken out the target, the objective, but it's still an indication that the stock might continue upwards. We did a research report on that. It's available on our site that shows that if you buy a stock from a rectangle pattern, it's a better strategy to actually sit on the investment as the same length of the price pattern. So in this example, measure the period from here to here and just use the same time frame as an investment strategy instead of just using the target price as the arrow. Because also it's a continuing pattern, it shows that the investors are just uncertain in a short period, but it's an indication that the stock might continue further up. The best way to learn and actually use technical analysis is to use it in practice. And you have a great opportunity today to both try Tostrams if you don't have it, and also subscribe to it, because it gives a good explanation how he thinks and get the important value of his mind based on how he looks at the market. We also have an offer saying that you can try our system full 1 month for free, and we will also give you the book that we've written about technical analysis, so you can read the theory and use it in practice. And by doing so, Jan Marius will show you how we think when we're using the system to identify interesting stocks.